Hello, friends and family in Pittsburgh and around the world. Welcome to July 2024 monthly market update. A lot of people always ask me what is going on in the market. Real estate, I've been an investor for over 25 years and an agent for 20. And no year is the same, no month is the same, no person is the same, which keeps it very interesting. If it's the kind of, if you don't like businesses that change a lot, this business is not for you. However, I was thinking about the fact that the world is always changing. So even if you have a job where the job itself seems like it's static, the world is always changing. So everything's changing around us. And I think real estate is a real indication of what is going on overall in our nation and in the world and what's going on with people, because it tells you a lot about buying habits and selling habits. There's always a need for people to buy and sell everything, whether it be real estate or clothes. But the issue becomes, where's the greater need and where are people putting their money and why? So the good news is, as of July, our interest rates went down a little bit. So we got real comfortable with these 2 to 3% in 2020, 2021. And then they really hiked up to the 8%. And now we're back down to the sixes. Now, the sixes are pretty normal, I would say. So we're kind of in a normal market. The prices haven't gone down, so that's surprising for a lot of markets. But Pittsburgh continues to be a hot area that people are moving to. I just helped a couple buy a house from Dallas. I'm helping move here from Florida, several clients from North Carolina. So people are coming here for a few reasons: affordability, um, climate, uh, easy access to get things and do things and opportunities. So it's exciting to see, because if you lived in Pittsburgh in the 90s, a lot of people were not, some people stayed, but it was not the level of enthusiasm for people to move here and grow themselves as people and grow their businesses. So that being said, compared to other major cities, we are still very affordable relatively. Actually, I just showed a few houses um, in Beaver County and Ambridge area, and I could not believe what you could still get for 100,000. I mean, these houses they were flips, but they were flipped nicely. Not huge, but still 100,000. I was pretty surprised by that. I work mostly in Pittsburgh and first ring suburbs, and you don't see those kind of prices anymore. But I think the outskirts will continue to appreciate. The areas I work most, which is Pittsburgh and first ring suburbs, have still stayed steady. I mean, we have a larger inventory. You can't really see the stats on the side, the number of days on market. We got very used to, during the pandemic, average minutes on market, right? So we really wanted to get offers in minutes. Now the average is about 48 days, which is still a seller's market. To turn it into a buyer's market considered 6 months worth of inventory. So we're still in a seller's market. Now, it's not the seller's market that was the pandemic seller's market, but it's still a very strong market. Right now, one of the challenges I'm seeing is just sellers and buyers coming to terms and being in the same place. And what I mean by that is sellers' expectations and buyers' expectations, I feel, aren't necessarily lining up in all cases perfectly yet. And for example, during the pandemic time, we knew you put a house, not all, but generally speaking, you had a house in the market and the seller's expectation was this much. And then the buyers were pretty much aligned, or maybe they pay a little bit more. Now we're finding more fall throughs, which means that buyers are putting offers in and getting excited about it. And then, whether after home inspection or after the mortgage or all different kinds of reasons, going, you know what, maybe now is not the time to buy this house. And I think a lot of that has to do with financial issues, that people have discretionary income people want to go on cruises, vacations, and still buy houses. Now, one thing I have recently heard from Brian Buffini's recent podcast is he had a very good point about the rental rates are still continuing to climb. So, and they are very high. So it's really a matter of, are you going to continue to rent? Or are you going to buy something? So, I think we're just in this state of the world right now, where all of us are reconsidering how we spend money and what we spend money on. And that will, of course, always affect the market. But as far as the real estate market, it continues to be strong. Sellers' houses are selling, buyers' houses are buying. We still have a shortage of inventory. It's just a matter of the sellers and buyers kind of being on the same page, and which that seems rather obvious, but it doesn't always work out that way. So if you are a seller, it's good to price your property right. And if you don't price it right, to lower the price as soon as possible so people don't wonder what's wrong with it. And if you're a buyer, to be realistic about what's on the market, but also realistic to what you can afford and what the risks you're willing to take. And also always remember, as a buyer, it's a long-term game. So you might think, well, that's a little bit more than I want to spend. Maybe you can cut out some other things. And then 5 to 10 years from now, that house is now doubled. So that's how appreciation works. Well, if you have any specific questions, you know where to find me. I'm at 412-657-3555. 412-657-3555. And I hope you're having a wonderful summer. I know I am.